I'm going to take briefly a topic called as bank reconciliation statements, an important topic in CMA foundation course from the examinations point of view. But before I take up the topic for this, let me explain to you what is bank reconciliation statements. What is a reconciliation term means? Reconciliation means trying to balance between the two which differ among each other. So when any business entity enters into transaction with its bank, you would remember that that transaction is entered in the bank column of the cash book. So let's call it as a cash book. But the same transaction is entered by the bank in its own book, in your accounts. Say your entity's name is XY. So there will be an account called XY account in bank's book. It will be recording that transaction. So the same transaction is written in the books of XY as well as in the books of bank called as XY accounts. What is XY account is what is known as a passbook. They give a copy of that. Now, both the books logically should record the transaction every time. That should not be. Only thing is XY will be recording from his point of view and bank will record the same transaction with his perspective. Say for example, you put deposit cash into the bank. For you, XY, it will be a deposit, bank DR to cash. But for the bank, it will be cash DR to XY. Alright? But otherwise the amount will be same. So at the end of the month, when you see the balance, both the books must show a balance. If you are showing a debit balance, bank books will show a credit balance under XY accounts. This is what you mean by cash transactions with bank. But it doesn't appear. There may be some differences. In case the differences occur, you must find out why the differences occur by preparing reconciliation statements. That is, those differences occur because of some reasons. There could be a time gap. There could be lack of information. There could be a fundamental error, mistake. So you must correct all these things and reconcile to see both the balances are same. For this purpose, bank reconciliation statement is prepared. So let's try to understand how bank reconciliation statement means and how it is prepared. Bank reconciliation statement is a statement that depositors prepare to find, explain and understand any differences between the balance in the bank statement, that's what I call an XY account in bank's book or the passbook, and the balance in their own accounting records, cash book. All transactions between depositor and the bank are entered separately by both the parties. They don't sit in the same place. The businessman has his own books of accounts, he enters it according to his choice, and bank has got so many depositors' account, it enters. A bank reconciliation statement is a summary of banking and business activity that reconciles an entity's bank account with its cash. Bank account means passbook with its cash book. The statement outlines the deposits, how many times you've deposited, how many times you've withdrawn, and any other charges affecting the bank account during a specific periods. Look at this cash bank account of a transactions. The left hand side is a cash book, bank account, where I've written the balance. You will see the passbook also I kept the balance, so both are same, 50,000 rupees. But when you come down to 30th November, cash book of bank account shows 80,000 debit balance, which should be 80,000 credit balance in passbook, but it is showing only 77,500. That is roughly about 2,500 is the differences. If you compare all the transactions, let's say for example, check issued on 5th, it is paid on a 9th, then check deposited on 15,000, it is credited on 13th, 10th, credited on 13th. You have issued a check on 21st for 10,000 and they were collected on 2 days, 23rd 9,000, 25th 1,000, and check again deposited 30,000, but you have deposited only 28,000 so far, that too on 29. So it took 4 days to credit 28,000. Balance still 2,000 is there. But in addition, you see that the bank charges, bank is put on 29th. Perhaps the information has not come to the businessman, so he has not entered in the cash flow. So because of this, the net difference is 2,500, and that is how they prepare. So based on this, you can prepare your bank reconciliation statement to adjust this 2,500. 77,500 passbook balance, add 2,500 for reasons of bank charges, for reasons for money not yet credited. All these things will amount to 80,000 rupees. Transactions that appear in company records but not in bank's records can include deposit in transit, that is, you have deposited but yet it has not reached the bank. Checks outstanding, you have issued the checks for payment, but still the party to whom you have issued the check has not presented the check to the bank for collecting the payments. There are some transactions which can appear in the bank account, like we saw in bank charges, but do not appear in the cash flow at a point date, at a particular date. So you have service charges, you have interest charge, NSF. NSF check means outstation checks, not enough funds. Suppose you have deposited a check, your bank takes the check to the parties. There are no sufficient funds, not sufficient funds. It is amount to a dishonor of checks. So bank will not credit anything, whereas you have added your balance. So these are the reasons. So what are the steps briefly to give you? Title with date and name of the bank. So you must write bank reconciliation statement with Punjab National Bank as on 30th March 2020, etc. Make 3 columns, particular columns, deductions, INR, and starting balance and additions. Starting balance and additions will be same. Deductions will be separate. First entry will be balance as per cash flow or the bank account. You can start the bank reconciliation statement from the bank account balance of 77,500 in our example and reach 80,000, or start from 80,000 and find out the deductions to the extent of 2,500, get 77,500. Enter the transactions in the first column, details of the discrepancy will enter, total the second column, total the third column amounts, find the difference. It will be the balance as per the bank account. If in case you start from the cash account, cash book, it will be the balance as per the cash book in case you started the reconciliation statement as per the bank passbook. This is how the title it is written, bank reconciliation statement, bank and all. So we will be taking some illustrations when we take up our final course.
Thanks for watching. Do not forget to click the subscribe button and hit the bell icon.